Hi students, welcome to Sunil's tutorial. I'm Sunil Mirwani and today we'll be doing this chapter called as investment account. We are going to be doing illustration 2 today. We are doing in the books of Mr. Ram Nene. In the books of Mr. Ram Nene. You're making investment account. You're making investment account of 12% government securities. For the year ending 31st December, the year ends on 31st December every year. We'll see the year later. Okay, let's start with the sum, guys. Now, before you start the sum, first thing you should know on what date are the interest payments going to be made. That always has to be your first working note. Let's see this. Mr. Ram Nene held on 1st Jan 2003 60,000 12% government securities of 100 each at 56,500. Let's just move down to the third paragraph. Interest on security is paid on 31st March and 30th September. So interest paid on 31st March and 30th September. Right? Let's see this. Mr. Ram Nene on 1st Jan 2003 held 60,000 12% government securities, right? On 1st Jan, to balance brought down. This is my opening balance. He held government securities of the face value of 60,000. Fine. Okay. And held the government securities of rupees 100 each at 56,500. The face value of them was 60,000. He had purchased them for 56,500. Let's make the interest due. We are making interest due. Okay. Interest on 1st Jan. Right. You have securities of 60,000. These are 12% securities. These are 12% securities, and you have to check the closest previous date. Now the last date when the interest was paid was 30th September. You have to check the closest previous date. Move behind from 1st Jan. Right? The closest previous date when the interest payment was made was 30th September. So 3. October, November, December. It's been 3 months. So your 3 months interest is due on this 1800. So interest is going to be 1800. Right? Next, let's move on ahead. On 1st June, he purchased 40,000 worth securities at 96.5 cum interest and brokerage of rupees 200. Purchase. Debit what comes in. It's purchase, so it will be on the debit side. On 1st June, to bank, he purchased securities of 40,000. Right? He purchased securities of 40,000. Now let's see this. Working note 2, working note 3. Interest on 1st June. He has purchased securities of 40,000. The interest rate is 12%. Check the closest previous date. The last date when you paid interest was 30th September. From 30th September to 1st June is 5 months. Someone please get me this.
31st March.
31st March. Okay, we have to have 31st March before that.
2 months.
Guys, before we go in for purchase, you have interest payment due on 31st March. So you need to pay interest on 31st March. So let's pay interest on 31st March. Pay the interest. We had made it due. Let's pay it. So 31st March by bank. Right? If I'm going to pay the interest, let's find out how much the interest is going to be. Interest on 31st March. interest is on 60,000. These are 12% instruments and for 6 months, right?
3,000.
How 6 months? Because from 30th September to 31st March, 3,600, right? 3,600, right? Next, working note 4. Let's see this. Now we'll come to the purchase on 1st June. He purchased, so to bank, he purchased debentures of 40,000. He purchased debentures of 40,000. Right? Working note 4. Interest on 1st June. 40,000 worth debentures he has purchased. These are 12% debentures. The rate of interest, June. You have just paid interest on 31st March. So that's April, May, and this is 1st June. So 2 months.
800.
Someone please calculate this. 800. Now let's find out the capital value. Guys, each debentures of 100 rupees. I have purchased debentures of 40,000. That means I must have purchased 400 debentures, right? I have purchased them at 96.5. Someone please work that out. How much is it?
38,600.
38,600. Since I have purchased them at 96.5, I have purchased them at come interest. He purchased securities come interest. Come interest. So you will have to less your interest. Interest amount is 800.
37,800.
Right? Okay. Besides that, he has also paid a brokerage of 200 rupees. Right? When you buy, you have to add the brokerage, because that is going to add to your cost. That 200 extra you have to pay. So your net value of the security becomes 38,000. The net value of your security becomes 38,000. So your income is going to be 800 and capital is going to be 38,000. Fine, do we get this thing clear? Okay, let's move on ahead. On 31st July 2003, 50,000 worth securities were sold at 94.5 x interest, brokerage 250. Right? Now on 31st July, sold. Debit what comes in, credit what goes out. On the credit side, 31st July, by bank, you have sold securities of 50,000. Right? Now let's find out the interest. Working note 5. Interest on 31st July. 50,000. These are 12% securities, and closest previous date you paid interest on 31st March. So from 31st March to 31st July is 4 months.
2,000.
Someone please calculate.
2,000.
2,000. So the interest is 2,000. Let's find out the capital value, guys. Capital value. 50,000 worth debentures. That means, and each debenture is of 100 rupees. That means I must have purchased 500 debentures. At what price have I purchased them? At 94.5. Right? Someone work that out please for me.
47,250.
47,250. Right? Now, this is X interest, so I need not deduct the interest. Okay, and they are saying that brokerage is 250. Now when you buy, you have to add the brokerage. When you sell, you have to subtract the brokerage, because you will get that much less money. You have to pay brokerage, and then the net amount you will get is 47,000. Right? So your interest is 2,000. Capital is 47,000. Right? Let's move on ahead. Now, once I sell, I need to find out the profit or the loss. How do I find out the profit or loss? Working note 6. Now you have to consider, in order to find the profit or loss, you have to consider all the transactions before the date of the sale. You have to consider all the transactions before the date of the sale. Now, how much had I purchased? 60,000 plus 40,000, right? That means I had purchased 1 lakh So nominal value is 1 lakh. Face value of 1 lakh debentures have been purchased. And at what price had I purchased? Someone please add this. 56,500 plus 38,000. 94,500. I had purchased them for 94,500. I'm considering all the transactions before the date of sale. Now I'm selling for 50,000. I'm selling debentures of face value. I'm selling government securities of face value of 50,000. So in that case, how much should my expected selling price be? 47,250. What is my actual selling price? Actual selling price is 47,000. I should have sold it for 47,250. I sold it for 47,000. That means I have incurred a loss of 250 rupees. Right? I have incurred a loss. So this will come here 31st July by P&L. Right? So this is going to be 250 rupees. I'm incurring a loss of 250 rupees. Fine, do we get this thing here? Let's move on ahead. On 1st December. Now before 1st December, you are going to have 30th September on the date on which interest payment is due. Right? So let's do this. Working note 7. Interest payable on 30th September. 30th September. Now, as on 30th September, what is the value of securities that you are holding? You had purchased 60,000 plus 40,000, 1 lakh, out of which you have finished selling 50,000. So you have 50,000 worth securities, right? At what your rate of interest is 12% and 6 months, right? So in that case, how much will this be? Someone please calculate. 3,000.
Yes.
So that is the interest payable on 30th September. So this will come on the credit side. 30th September by bank. Interest payable is 3,000. Right? Next. On 1st December, 20,000 of securities were sold for 96,000 come interest. Debit what comes in, credit what goes out. Sold, that means it should be on the credit side. 1st December by bank. I have sold securities of 20,000. I have sold securities of 20,000. Working note 8. Let's find out the interest. Interest on 1st December. I have sold securities of 20,000 at 12%. Right? Now the closest previous date. I just finished paying interest on 30th September. So September, 30th September, October, November, 2 months.
400.
How much is that?
400.
So interest is 400. Now I have sold the securities at 96 rupees. Each security is of 100 rupees. So the number of securities that I must have had is 200. I sold them at 96 rupees. Okay. Someone please help me calculate this.
19,200.
19,200. I sold them come interest. Come interest. That means I have to deduct the interest payment from here. 200. Is there a brokerage involved in the transaction? No. There is no brokerage involved in this particular transaction.
18,800.
This is going to be 19,000. Right? So this is going to be 19,000 and your interest is going to be 400. Right? Interest is going to be 400 and capital value is going to be 19,000. Fine, do we get this thing clear? Yes, there's an issue here. This is 400.
Yeah.
So this is 18,800. 18,800. Right? Once you have this, you have your sale transaction done, then you have to calculate your profit or loss. Let's see how do we calculate profit or loss. Working note 9. You have to consider all the transactions before the sale. Right? I had purchased 60,000, 40,000 and I have sold 50,000. So the nominal value that I have is 50,000. I had 1 lakh out of which I have finished selling 50,000. That means I have another 50,000. Someone please calculate the capital value for me. Capital value is,
500.
excuse me,
500.
this, and out of that then you subtract these two transactions. That's your 47,250.
47,250.
After subtracting you get 47,250. Okay. Now you have sold securities of 20,000.
No, sir.
Yeah, how much is that?
So we get 28,400.
No, not possible. Not possible. 56,500 plus 38,000 minus 47,450. So it has to be somewhere in down
28,450.
47.
right? Let's find out the expected selling price. Someone please help me get the expected selling price. 47,250 into 20,000 minus 50,000.
18,900.
How much? 18,900.
900.
So I should have sold the securities for 18,900. That's my expected selling price. My actual selling price is 18,800. Right? So I'm incurring a loss of 100 rupees. I'm incurring a loss of 100 rupees. Fine. So in that case, you will have 1st December by P&L. You are incurring a loss of 100 rupees. Fine. That's it. And now on 31st March. Okay. Now let's tally the account, guys. You are supposed to close the books of accounts on 31st December every year. Let's tally the account. Always tally the nominal account first. So that's 1 lakh. This is going to be 1 lakh.
30,000.
31st December by balance carry down 30,000. Right? Now, once you have this, let's do the interest calculation, guys. Working note 10. Working note 10. Let's see the interest calculation. Interest on 31st December. You have 30,000. These are 12%. And you have closest previous date, September. That means 3 months. Someone please help me calculate this. 9,000?
900.
900. Okay. Interest is 900. Okay. Now, let's someone please tally the capital account.
94,500.
94,500. 94,500. Someone please help me get the difference.
28,350.
28,350. Working note 11. Right? Now, the capital value difference you have found out is how much?
350.
350. Okay. Now they are saying that if you see the last line of the sum, they are saying that the prices of the security was 96,000. The price of the security on 31st December was 96,000. That means on the stock market, this particular security was quoted for 96 rupees. Now I have security of 30,000 rupees. The value of each security is 100 rupees. That means I must be having 300 securities. Quoted price. I have 300 securities of 96 rupees each. Someone please find this out. 28,800. You have two prices. One is your capital value. One is your quoted price. Right? You have to always consider the smaller price of the two. Out of these two, the smaller price is 28,350. So I will write here 28,350. Right? Had 28,800 been the smaller price, then I would have written this here and the difference would have been written as P&L. Okay? Now let's tally the income account, guys. Someone please help me tally the income account. At the credit side of income. At the credit side of income, please.
9,900.
9,900. 9,900. This is 31st December to P&L. Someone please help me get this.
7,300.
7,300. Right? That finishes the sum. We'll stop this here for the day. Thank you very much.